The Jack Welch Management Institute at Strayer University helps you go from, I know the way, to I've arrived with our top 10 ranked online MBA. Gain skills you can learn today and apply tomorrow. Get ready to go from make it happen to made it happen and keep striving. Visit strayer.edu/Jack Welch MBA to learn more. Strayer University is certified to operate in Virginia by Chev and has many campuses, including at 2121 15th Street North in Arlington, Virginia.
This episode is brought to you by Progressive Insurance. Fiscally responsible, financial geniuses, monetary magicians. These are things people say about drivers who switch their car insurance to Progressive and save hundreds. Visit Progressive.com to see if you could save. Progressive Casualty Insurance Company and Affiliates. Potential savings will vary, not available in all states or situations.
Hey guys, Akil Stokes here. Welcome back to the Trading Coach Podcast. In today's episode, we're going to talk about two things: risk management and emotional control, and how those two are intertwined as a very important part of your trading success. But before we get stuck in, I've got some very big news for you. A lot of you guys have been asking me recently about advice for what do I need for a trading computer, because I just had one recently built. And of course, me knowing nothing about technology, I kind of just said, I don't know, just get the same as a gaming computer. But I got some really cool news for you, because I recently reached out to my friends at EasyTradingComputers.net. Those are the ones that built both of my trading computers, the one that I had, 15 years ago when I first got started, and the one that I just had built last year. And they said, hey, Akil, we'd love to help. So they gave me a website. You can follow the website. It's in the show notes below. Click it, enter your email, and they will share with you a complete guide to trading computers. It is kind of like a free guide that explains what should be included, what everything is. It's the same thing that I used back in the day when I first had my trading computer built and really had no idea what I needed or what I didn't need. So it's a really cool resource for those who know nothing about technology, and probably an even cooler resource for those who do, since you can kind of compare and contrast and get all nerdy with the specs and whatnot. So check it out. Links in the description box below, and I think they'll give you like a $50 discount if you do end up buying anything. I don't know, but it's an awesome resource to have. All right, enough of that. Let's hop into the show. Losing trades typically affect future trades, because we get all angry and then we get all upset or depressed and scared, whatever emotion that we get, and then we take it out on the next trade. So your next trade, you're afraid to enter. Or your next trade, you double down on your position size because you lost the previous one, right? And a lot of those mistakes happen because of our emotional state. We're seeing red, right? Again, it's like when, you guys ever see the movie 300? The Spartans, anybody? Did I tell you the story? I was supposed to be in that movie. I was supposed to be an extra in that movie. But once I took off my shirt and greased myself up, I was so physically attractive that I took all of the eyeballs away from Gerard. So they said, you can't be in this movie, man. Everyone's going to be looking at you the whole time instead of looking at the main character. I said, I get it. I understand. It's not the first time I heard that. It's okay. But in that movie, there's a father and son that are he was ripped. He was no Akil. In fact, I signed an NDA, but some may say there might have been a body double. They might have just edited his head on my body. I'm not saying that happened, because you got to sign stuff, but go rewatch it. He's a little tanned, isn't he? Just saying. He's a little tanned. Anyway, in that movie, there was a father and son fighting. And, it's all glory, the father's dream. Like, in these day and ages, it's like LeBron James, where it's like, your dream is to play in the NBA with your son. That's awesome. Back then, before there was an NBA, the dream was to go to war and fight in the same battle with your son. So, father and son are fighting, son dies. Father gets blood rage. If you remember the movie, you know what I'm talking about. If you don't, blood rage is basically he's just emotional. He just lost his son. And he just goes out there with his swords and he just starts going crazy. It's like one of those old video games where you get like, or like Mario when you get the star and he's invincible. and you just start running through and killing everyone, that's what the dad was doing. But the fact was that, again, what the previous occurrence, his son dying, is what caused him to go emotional and not think rationally and just charge into like hundreds of enemies and start killing them. We do something similar in the market where our emotions don't affect our current trade as much as our as our next trade. So when we have an emotional response where it's like, oh man, stupid, it got stopped out and I knew I shouldn't have. Again, we can I guess we can go through a lot of different emotions: fear, greed, rage, but we tend to take it out on our next trade without even knowing it. That's one of the reasons you want to do those pattern interrupts after a trade. But also, I found in my personal experience, because I was a very rageful trader, that if I have acceptance, I handle the future a lot better. Meaning that if I'm in this trade and it gets stopped out, and I don't expect it to get stopped out, if I go in here with the idea like this trade has to win, that's why you hear me get really upset anytime someone says it must win or it has to win, because you're just setting yourself up for failure. Because if it wins, you're not happy because it did what it was supposed to do. If it loses, you're super disappointed. So I get really mad because the market can do whatever it wants. But if you just come to peace where it's like, overall, we never know if any individual trade will win or lose. But if you come to peace with a potential losing trade where you say like, hey, I have this trade. It is a good trade. I'm supposed to take it. But my stop loss, I wasn't able to get my stop loss in the greatest place per my rules. Like I wanted to, if I could, I would, but I just can't. Like, and that's going to happen a lot of time in the market. If you just accept that, hey, there is a chance that the market could do something skunky, where it spikes up a little bit, stops me out, and then rolls in my favor. If you've accepted that before the trade happens, it just doesn't hurt as much. And when it doesn't hurt as much, your reaction is different. Where before your reaction would have been like, I can't believe it. And you grab your sword and go slaying bad guys. Now your reaction is like, yeah, that sucks, but yeah, I kind of knew it was going to happen. Then when that next trade comes, you've already kind of decompressed and moved on. And now the previous trade is not affecting your next trade. Because you don't want your previous trades to affect your future trades. Your future trades have absolutely nothing to do with your previous trades. That's like taking baggage from your last relationship into your new relationship, right? You're taking it out on your partner for no reason. It was your last partner that cheated on you. Why are you so upset and untrustworthy of your new partner? It's a whole different thing. But I wouldn't I wouldn't run from the trade because we never want to skip valid trades. I wouldn't make an unnecessary adjustment. If you can make an adjustment within your rules, that's fine. But you don't want to adjust outside of your rules because now you're sabotaging the current trade. You have two options. You can skip the trade if it's within your rules. I don't think you should skip a good trade. But if you have rules that say, hey, if I can't do A, then I must skip, right? I have that with 1-to-1 risk-reward ratios. But sometimes you just have to make peace. You may just have to make peace. We're same thing like we spoke about yesterday in our Q&A lesson, where we did a lesson on CTS trading, and we're breaking down a trader's trading plan. He was saying that, hey, there's a difference between how I trade if I have a low CTS score and a high CTS score. If you guys aren't familiar with CTS, the higher the score should mean the better the trading opportunity. The lower the score, the worse the trading opportunity. And we talked about some methods of saying like, hey, if you have a higher score, meaning a better trading opportunity, maybe you could be more aggressive in your entry or more aggressive with your position size. If you have a lower score, which means less technical factors, it should mean a less great trading opportunity. Maybe you want to trade a lower position size, risk less, or maybe you want to have a more conservative entry. But something else you can do as well is, again, in that situation, is if you have a low CTS score, but you still want to take the trade, because it's still a trade. It's not a great trade, but it could be a good trade. Maybe you mentally prepare and say, hey, this is a trading opportunity. It's not a great trading opportunity, but it still is one, and I want to give myself a chance to be involved. Just mentally, I know that it isn't the best, so maybe there's a better chance of me losing. And again, I'm going to make peace with that. That way, I don't carry that baggage over into my next trade, which could be a great trade, but all of a sudden I skip it because I'm scared because the last trade lost. Or all of a sudden I trade too much size because I want to make up for the last loss, or I enter early because of this, or I enter late because I'm fearful, right? We just don't want to let the present affect our future. Lou says, we are supposed to think, how much money can I lose on this trade and any trade as a start off, right? Yeah, you should know how much you risk before you ever take a trade, right? And that risk should be within your risk parameters. So that's a whole position sizing and money management conversation, which we have a course on that, Lou, when you'll get there at some point later on in the trading. I think it's after you learn about all the strategies. But yeah, you should know exactly how much you're risking. And more importantly, you should be okay with that risk, right? Here's the cool thing about trading, right? You never need to risk more than what you're comfortable risking. Am I wrong? Right? Is anyone, unless someone is holding a gun to your head and saying, hey, Carlo, I'm going to need you to risk 5%. Unless you're me when I managed money and my client was calling me every day telling me to increase my risk. And I was like, no, that's not a smart idea, but I didn't have a spine. So I just did it and then lost a lot of money doing it, right? No one's forcing you to risk. So that's the cool thing about trading. We operate in our comfort zone. And when you operate in your comfort zone, it gives you a lot more, it handles your emotions, right? Like, let me ask you this. If you are, here's a good example. And some of you are going to be different, right? I told you about buying islands and changing houses every year for tax write-offs. Anyway, if you lose a $50 bill, that's going to hurt a little bit, right, guys? I know some of you guys are big ballers, right? But if you lose a $50 bill or a $100 bill, you're probably going home and you're steaming. You're probably like, oh, okay, let me bet. Like my kid yesterday almost we thought he left his tablet and his Nintendo Switch at practice. And I was about to hop in the car and drive right back there and just like shake everyone down. I was going to lie. Who has it? Who has it? No one is leaving this place till I check every single bag. Strip down, right? It was going to be one of those things, right? I probably wouldn't have been here today or running the live room from jail. Now, compare that to nothing is lost. It just changes ownership. Oh, man. Spoken like a true thief. Compare that to like if you lost $1. Are you backtracking over a lost dollar or a penny, who Chris said I think was going out of business? Right? If you lose a penny, are you backtracking over that? Are you driving back around seeing if you lost? No, you don't care, right? If my kid lost like something stupid, I don't know, anything less than a Nintendo Switch and a brand new iPad that he got for Christmas, I'm like, okay, like he left hoodies before, like his jacket. Here we go. He left his jacket before. He's like, can we go back and get my jacket? No, we're not getting it. It's not where I'm not driving 30 minutes to go get the jacket, right? So it's the same thing in trading where it's like we have the ability to risk what we feel comfortable with. And my mentor always told me this. He said, when you trade, as far as like an emotional, psychological perspective, we should trade so small that it doesn't make us happy when we win. And like happy monetarily speaking. Like we're happy because we won and we made a good prediction, yes. But we're not like, I won the lottery, right? It shouldn't change our lives. You shouldn't all of a sudden like be able to go to the Ferrari shop and get a car. We should trade so small that it's not life-changing when we win, but nor is it life-changing when we lose. Right? We should be able to win and be like, yeah, that was cool. We should be able to lose and be like, man, that stunk. But it should be a dollar bill. We shouldn't get upset about it. And that's how we manage our emotion. Now, the flip side is that doesn't fall in line with all the get-rich-quick stuff, right, guys? That doesn't fall in line with what we're recently being conditioned to expect, where it's like, Akil, I'm supposed to make 50% a month every month. Ferrari life, right? All that dumb stuff. It doesn't fall in line with that. Because now when we win, it's not life-changing. And we're conditioned like when we win, it should be life-changing. So people don't want to do it. They want to risk more so they can make more. The problem is trading isn't about making more. Trading is about losing less. It is about conservation of capital. It really is. Because what happens is these traders that make a lot, yeah, you make a lot when you're hot, but then they give it all back during the cold streaks. They give it all back because if you're trading more and making more when you win, that means you're risking more. You just happen to be winning. But when those losers come and you're still risking more, that's how accounts get blown. The real traders are the tortoise. It's slow, it's steady, it's repetitive, it's boring, but it's always moving in the right direction. And when you do it year over year over year, you don't have to stop and take breathing and sleeping breaks like the hare. I think that's what happened with the hare, right? He fell asleep and the tortoise passed him. You don't snooze. You keep moving. But yes, you should know your risk before every trade. Either, and there's a few ways that we'll teach you that in the money management section of the course. Either you have a flat risk, I think it was Lou who asked this, where it's like, hey, Lou, you risk 1% of your account every time. And then you adjust your position size based off of what 1% would be. Or you have a set position size, but you have restrictions on your stop loss. That way, that set position size never goes above your 1% risk or whatever it may be, or whatever your zone may be. And that's another great way of keeping us emotionally stable. That's the key, if you guys can't tell, right? Stay emotionally stable. I think that's I'll leave you with this. That's one of the reasons that, and my mentor always said this about me when I started trading. This is one of the reasons he had a good feeling I was going to be successful. Because he said, and this comes from my sports background and my general lack of, I don't have a lot of empathy or emotion, but he said, Akil, because, so I'm trading, right? And this is after the period of me sucking for a year and a half. I got good. I'm growing closer to my mentors. We're having conversations, and I'm a good trader. So I'm catching these hot streaks, and we're talking trader talk. That was a hot month, or that was a big trade, and he's reaching out to me, my mentor, and he's looking to celebrate. He's like, yo, did you catch that big move on pound New Zealand? I'm like, yeah. He's like, that was a 10% move. That's crazy. I made a quarter worth of returns in one day. And I'm like, yeah. He's like, dude, aren't you happy? I'm like, yeah. And what he noticed about me is I don't change. If you imagine my emotional level being a straight line, and above that, the top of that line is emotionally happy, below that line is emotionally sad. I pretty much stay on that line. For better or worse, it's not the greatest thing in the world. It's just my personality. I don't get high, I don't get low. I stay neutral. And maybe it hurts me in some other aspects of life. I don't get excited about stuff. Everyone's like, yeah, your kid was born. I'm like, yeah. But in trading, it's magical because I rarely make emotional based decisions because I just don't get excited over wins. I don't get disappointed over losses. I just move on. But that's been one of the blessings, and that's one of the reasons he's like, you're going to be a great trader. I said, how do you know? He's like, because you're going to learn. Obviously, I had the tool for learning, but so he said you're not going to get sucked into making the dumb trader mistakes because you just don't show any excitement or disappointment about anything. I'm like, yeah. Before you go, do me a favor, leave the podcast a rating and a review. Share this on your socials. That's the best way to support what I'm doing here. And I will see you guys tomorrow for another episode of the Trading Coach Podcast. Until then, plan your trade, trade your plan. Take care.